Hey guys, Liz here from BG Trading. Hope you're well. And today we have our senior analyst Johnny that will be talking about one of our favorite stocks, Zip, and what is the half financial year's earning report impact on share price, and when we believe it's gonna be our next entry on this company that we love trading. Let's have a look. I just want to remind you, this is not a financial advice. It's just us sharing with you our experience and our view about the company Zip. And if you like this video, please subscribe to the channel and hit the like button. We also have a Facebook group. I'd like to invite you to become a member. A lot of great content, high quality conversation. The details will be available on the description below. Hi, Johnny. How are we doing today? And what do you think is going to happen? What's your overview about Zip? Share with us.
Hey, Les. So we were having a look on Zip this morning, and they have just released the half one results. And we are pretty sure that this is a company that is really solid. They bought another company in the US last year. So you can see this impact in their revenue. So if we look this orange bar in here, we can see the impact of the acquisition in their revenue. And we can see as well that Australia and New Zealand, which is the orange part, is growing as well. So the company has been maintained a constant growth year over year, half over half, when it comes to revenue and transactions volume. In fact, the organic growth of the company, they are the orange bars.
The orange bar, okay.
Yeah, when we talk about organic growth, we are talking about the same store sales. What I mean with that is that if you don't acquire anybody, if you don't sell anything, if you have your business as is, what is the growth that you would have if you don't change anything? So this is the real and organic growth.
And the yellow bar is the acquisition, the figures related to the acquisition of Quadply, is it?
Perfect. So you can see that they could manage really well the way that they acquired this new company, and it is an overseas company, so it makes things harder. And they could maintain the growth in Australia and New Zealand market, and they could improve and enhance the growth in the US as well. So it is a pretty healthy company in terms of volume and in terms of revenue. If we have a quick look in their P&L, so this is a kind of a resumed P&L for the half. This is not the full year, the fiscal year closing. So if we have a look in here,
this is just half a year financial results, right? I just want to make sure everyone understand that. I just want to continue. I just want to ask you to give us a little bit of explanation related to the loss, because a lot of people say, how can the share price go up if the company keeping reporting losses quarter by quarter and year by year? Say, just so you can give a little bit overview on that as well for us, please.
Okay, it's kind of a little bit tricky to talk about loss, because you have to know what line of the P&L you are looking at. So if we look for this P&L, for example, we can see that they divide the P&L in two main parts. The first one, it is the operating EBITDA or EBITDA. And in fact, they are not considering the interest in here. So this is why we have the I missing. But when we have a look on that, we can see that the cash EBITDA in here, they are representing the profitability of the their operations. So it means that if they have an operation, and as is this operation is going on, is it being profitable or not? Then what they do, they just show it, and here we can see that they are really stable. So they have improved their gross margin, the gross product margin. They spent a little bit more in operating expenses. That's fair enough because they had an acquisition.
Is that why the EBITDA is it's worse than last quarter? Is that because the acquisition?
Yeah, some of the expenses are higher than the past. Some of them are because of the acquisition, as they highlighted here on the left-hand side.
Okay. Yeah.
But I don't know if everything is related to that. What we can see is that they still have a profitable operation. And if we look here at the downside, let me just put here at the top. If we look here at the downside, at the down part underneath, we can see that they have another costs that it is not related, straight related to cash. So they have some costs related to FX rates movements, to finance costs, amortization, to movement in provision for expected credit loss, which means that they have to kind of recognize if their customers will pay them or not. So they need to consider this risk in their numbers. So everything that is underneath this part, it is kind of things that are not going to impact the cash flow right now. It can impact the future. It is here, it is considered, and this is why the net profit, or not the net profit because we're not considering amortization, depreciation, etc. But if we consider the reported EBITDA, we can see a loss in here. But it doesn't mean that this is a bad thing, because when we look to that, we have to analyze the whole thing. We have to analyze their operation. They have a profitable product here, as we can see in the cash gross profit line. They have an operation profit. They are really stable. And if we consider this other impact, they will have this loss. But honestly, they are a pretty solid company. And the main thing is to see if the operation is generating cash. Because Zip company is a company that they are kind of getting in the break-even point right now. So from now on, they are going to make more cash. They are going to keep growing, and for sure they are going to pay everything that they are doing now as investments. So if
so provided they don't do another acquisition, for example, if you do another acquisition, then obviously
this is
I think
it's not bad for a company to have loss or to have debts or to have loans. It's not bad. The bad thing is when you don't have the control of that. If you don't have a balance, this is the bad thing. So just to close, another great indicator in here, it is the net cash flow from the operating activities. They are generating cash.
So the massive jump from 4.4 million to 13.9 million.
Yeah,
this is a positive for sure.
Yeah, of course, if you look to the other two lines of the cash flow statement, you can see that they are getting money from banks or whatever to cover net increase in receivables, to cover the receivables. What does it mean? They need cash, and they need cash to keep the operation running. It doesn't mean that they are incurring on a loss. So you can't, it's wrong for you to analyze this cash flow statement just for these two rows. And the best thing to do, it is to try to understand if the operation right now is generating cash and if they are having a good balance in their receivables. And it is completely normal to see the receivables increasing. because they are increasing in revenue, they are increasing in volume. So their receivables will increase as well. So
but in this case, just to understand, net receivables is decreased, isn't it? It's like it's negative. $453 million compared to last year.
It is a negative impact.
Okay.
Because they have more money to receive. Okay. All in all, the company is a pretty solid company. It is growing. It is doing everything to keep their movement to grow a lot and to be one of the most important BNPL in the Australian and New Zealand market, and have a relevant presence in the world. So they are keeping on track on that. They have a really good plan and strategy to do that. What will happen with the share price? No idea. In fact, we never know what will happen with the share price.
That's why I think that's why most of people.
Yeah, I just look into the numbers. I just believe that this company will be really profitable in the future. Will keep growing, and as a long-term way of investment, it should be something to look at. I would put my money in this company for sure.
So we just, as you know, as we know, we just at the moment I think Zip is trading around 1180 dollar mark. It just hit. It had about 160-170% increment on the share price through January. And then I was just wondering whether most of this rally was to do with the great growth perspective on that. And then now with this report, we probably have a solid indication of what investor will be doing at the end of the day. So, do you think the part of this sort of information was already factored into the share price, you reckon?
We can't say that because we don't know. In fact, people don't know that. Why? Because otherwise it would be inside information, and this is forbidden. This is crime.
Okay, yeah, that makes sense.
So, but on the other hand, people know that the company acquired somebody else, and their numbers will be better this time in terms of revenue and volume growth. So probably we can say that the share price has already considered this effect or not. And the most important problem is the speculative trading, because the market is really sensitive. It's not rational, for sure. It's not rational. So sometimes we think that, okay, probably this share price is really high, and then the other day it double the price. Why? No reason, because of speculative trading. And they are not thinking about, okay, I'm going to invest in this company because I believe in this company and because I want some dividends in the future. No, they're not thinking about that. They are thinking in a complete short term. Nothing wrong to do that, nothing wrong. But this fact is key to understand in order to see if the number has already considered this report in the share price number or not. What I mean is that the number is polluted. There are many things in that number that we can't read behind the lines. And
which number you mean? Sorry, which number are you talking about?
Share price.
The share price. Okay, I understand. Yeah.
Share price is a price that is biased.
And the problem as well, I think, because part of the share price is we got also facing all the short traders that are trying to put the price down. Every once the price hits a sort of resistance levels, and then a lot of people selling at those levels just as speculating. And so we don't have the true, that's another problem. We don't have the true value of the company reflect on the share price. Probably, well, most of the stocks, to be honest, I think. And but overall, you'd say that long-term investment would be very interesting. Is that correct?
Yes.
Mm, okay. And then a lot of people trying to compare with Afterpay, and they are different businesses anyway, but it's the same sort of area. But I think the biggest mistake is to compare side by side with Afterpay rather than analyzing the business itself. What do you think?
I think that the first thing to do is to compare the business today with the business from yesterday.
I think
And
we lost you
then,
here. Sorry, I think we lost you. What did you say?
so the first thing to do is to compare the business now from with the business from yesterday. The thing is compare the business with the same business. Compare Zip with Zip. Zip now compared to Zip 2 years ago, compared to Zip
Okay.
1 year ago. And then after doing this exercise, you can get companies in the same industry and try to see what is happening in the industry. And it's really, really important to do that as well, because you need to understand how the market works in order to see what are the future opportunities for the company.
My question is now, provided that those figures came up today, the company could, if the company starts operating conservatively, which is not going to happen, but let's say hypothetically, if the company, if Zip operates conservatively with quad play and then all the stock that currently exists, it would be close to a break-even point. Is it?
I would say that if the company keeps the growth, the revenue and the volume growth consistently, they are going to make more money, they are be more profitable, and etc.
Okay.
I feel reading everything that they are already got in the break-even point in terms of the operation.
Even though, and that's what people don't understand, because the operational for you, it's already reached the break-even point, although the net profit is still going to be negative for years, probably, isn't it?
Probably yes. I need to see the last report, but yeah, you have a point.
Okay.
It doesn't mean, when you look to the net profit line, if it is negative, it doesn't mean that the company is terrible. No, you need to understand what is the environment, the market context, what happened, and then you start thinking about a conclusion, if it's worth or not to put your money in there, if you believe that the company is going to be profitable in the future or not.
And that's something that we always tell our viewers and our members, is to, rather than just follow the orders, we just go Zip and then start buying Zip as well, just to understand a little bit the fundamental of the companies before jumping in, not just because someone else is doing it, but
yeah, this is a difference. First thing first, you need to decide if you want to try to do short-term or long-term investments.
Yeah, of course. Yeah, exactly. And then, so you think short term doesn't really matter what the company is up to? Is really,
yeah. I in
just
fact,
really swing price. That's why we do a BGS 20 strategy anyway.
Yeah.
But obviously, we always pick up stocks there if fundamentally have some good value, just in case the swing goes to the other way. It's always good to know that you, even if you have to be sitting into a stock a little bit longer than expect, you are sitting in a reasonably good business rather than just let's say, sorry the term, but dog shit stock, like a lot of arounds. But yeah, that's good, Johnny. Thanks a lot for that, mate. I think it was very helpful, and so give us a little bit more confidence about business, and we'll be open a position once SP gets a little bit closer of SMA as per our strategy. And at the moment, we're just going to be sitting and watching and see what's happened until we find confirmations from our indicators. All right. Thank you very much. And
see you around. Bye.
See you. Thanks, guys, and have a great day. Good luck.